All right, this is a trade breakdown on Vix50. What I have here is, of course, anytime you want to look at the market, you start from the weekly. As at the end of a week, you want to look at the market, always start from the weekly. This pair is bearish. It's bearish. I've marked my zones on the weekly. You come down to the daily. You can see my zones on the daily. But for intraday trading, I take my entry on the 15 minutes and on the 3 minutes. That's how I do my intraday trading. I use my 15 minutes for my intraday bias, my daily bias for current trade. All right. I'm going to show you what I mean here. Let's go to 15 minutes. When I've done my top down analysis, maybe by the weekend, and I want to get in on trades for the day, I take my setups on the 15 minutes, then I take my confirmation entry on the 3 minutes. My set limit entry, limit order entries on the 15 minutes. My confirmation entries on the 3 minutes. That is after I must have done my top down analysis and I know where the market is going to and whatever it is that is pushing the market there. So this was the first trade I got because I saw the market. Why did I get in on this trade? I'll tell you why I got in on this trade. Look at what the market did. Look at what the market did. The market was bullish all this way. It was bullish from here. We became bullish here. Created this high, put in this low. Created this high, put in this low. Created this high. Now this high cleared this low to put in this low. That means we have confirmed that we are going to start selling this market. And remember, this market is overall bearish. So this means that now that we've put in this low, we are going to buy to supply so that we can continue our sales, which was why I framed this trade that it will buy. Okay. So when we put in this low, here, this was a bullish trade until market took that structure here. So if you mark the level from this high to this low, you could see that this 50% line is the equilibrium. Above the 50% is the premium. So we are going to look for sales on the premium. And now price needs to get into premium. Price needs to get into premium before you could do any form of valid sale. That was what led me to taking that sale, to taking this buy. This buy was actually a counter that will take me back to premium. I marked out my valid zones in the premium. I marked out this zone, which is the closest unmitigated supply zone on my premium level. There's another. Okay, this is the closest unmitigated. The farthest one is this one. This is extreme premium. Okay, this is extreme premium. So I knew that price would get here, if anything. So what did I do? I saw that price has mitigated this demand here. It has mitigated this demand here. You could see that price mitigated that demand somewhere here and it rejected. That goes to show that this demand is going to hold because look at the reaction it did on this demand. Let me mark it. So we are bearish, sold, bought, sold, bought, got into the demand and then took the high, cleared the high. You understand? So this is a confirmation that we are going to buy. We are going to buy at least to equilibrium. When I saw it, immediately I saw this, I marked out this zone, the extreme demand. Then I marked out this one, demand that broke structure. Okay, demand that broke structure. When you're trading two zones, when you have two zones at the same place, the zone there are techniques to picking a valid zone. Why didn't I trade from this extreme demand? I'll tell you why I didn't trade from this extreme demand. This extreme demand, when it bought, did not really break structure. It just swept it. This was the zone that broke the structure high, this high and this high. This was the zone that broke it. So we're going to prioritize the zone that broke structure, except there is liquidity resting under that zone that broke structure. In this case, nothing is resting under here. And this zone was the zone that broke the structure clearly. This zone actually pushed price up, pushed price to the upside. And when it got there, it didn't really, it swept. There's a slight break of structure here. But if I go to a slightly higher time frame, you see that it was a sweep. It was a sweep. Another thing we do is we wait for confirmations to take our trade. I take my trade confirmations on the 3 minutes. So if I should take this thing on the 3 minutes, let me show you what it did. This zone. So you come down to the 3 minutes, you will see this is the 3 minutes here that I just marked. So when price started selling, when price came back to this zone, what did it do? This was where it mitigated the zone here and rallied back up. So we have let's see how it confirmed in 3 minutes. I didn't take it in 3 minutes, I took it in 15 minutes. But let's just watch and see how it confirmed in 3 minutes. We have this low, put in this high, put in this low, put in this high, and then we'll dug into this zone. All right. So finally we closed above somewhere here. I think closed above here because this was a range. After all this range, we closed above somewhere here. Okay. So we came down to this zone and picked order here. And picked order here. So you can still get in on this trade and get some very serious profits if you enter with 3 minutes confirmation. This was the first zone we would have entered from. I don't know if he mitigated it or it's a missed entry. I think it missed it. This was the second zone we would have waited for it to come back to, which was also a missed entry. So what zone did it then buy from? It was from this zone that he bought from. These are the problem with confirmation entry, but it helps you. So finally around here, you will get in on the trade. You will get in on the trade. But your target, because his confirmation entry is get out, you're going to target your closest liquidity draw, which is this high. So target this high, and our low is here. A very solid one is to 5 trade, and you are in and out of it. So I was just trying to show us how to take confirmation entry. That is, by the way, I didn't take this trade using confirmation entry. I took it using set limit because I did my top down analysis. And when the trade came on, I just got in on the trade that way, and my target was just this high. They got in on the trade, target was this high before I reversed. So you could see where I tried doing continuation entry, it took me out. The continuation entry took me out because the objective target for this continuation entry actually is this zone, this high, which is a very solid one is to 5. That is the objective target. We are going to talk about setting profit target. I have a small book on it called TP101. Setting profit target. This continuation entry is supposed to target this high, but objectively, this high is the take profit, and that was the high it gave before it reversed and took us out. Because our stop loss is set inside of a liquidity pool. Price may still come back, mitigate some very valid areas, and then react from those areas. If we should go down to the 3 minutes, we'll see that price came down to mitigate some of the valid areas. Let me show you. Come down to 3 minutes. We are going to see it. This is it around here. When price came down to mitigate some areas, could see price mitigated this zone. Price actually came all the way here to mitigate that first zone we marked out for our continuation entry. This first zone we marked out here. It was slightly mitigated, but when price finally came back for it, that was where it reacted from. This zone. Because that was the closest what they call it now. The closest demand level after price tapped into our zone. That was the first sign it gave. Okay. It did not touch it here. It came back almost there. So you might think you've missed your entry. You've actually not missed your entry. Another thing you will understand is Another thing you understand is why would price still come back to this zone after everything it did? You could see that we clearly have liquidity on that zone. Where's the liquidity? We have equal low liquidity. If you see these two candlesticks here, they are relatively equal. So this is equal low liquidity. This candle low and this candle low. Relatively equal low liquidity. It did not mitigate this demand. So it bought and bought and bought and bought and bought and bought and bought. After everything it did, it came back to mitigate the demand. And that was the true zone that price now bought from for continuation entry. That was the true zone that price now bought from. So if you should take in this trade like this, continuation entry using confirmation, you're going to make serious money. And then you target the opposing zone. You are in on 1 is to 27. You target the opposing zone. You are in on some crazy money. So this happened on 3 minutes. That is why I take my entries, my confirmation entries. I take them on 3 minutes. What it does is that it taps into your supply or your demand, taps into your valid supply or your valid demand, and then it gives you very sweet profit. You just have to be patient. This happened around Monday, 15 June, 3:36 p.m. and it peaked order around Tuesday, 12:45 p.m. the next day. Almost for a full day, you are waiting for price. So you can see what it did, and it delivered profit. All right, and then reversed. I will also show you the confirmation. When you get to this supply zone here, this is a 15-minute supply zone. So when price dug into that supply zone, you could see the confirmation it gave. This confirmation actually happened. This one is a very simple confirmation. It happened within the zone. So we have this low put in this high, put in this low, put in this high, put in this low, and then put in this high that swept liquidity. And then we have this low. Now you're going to mark the supply level from this leg, which is this zone, which is now in this zone here. So this is the supply zone on 3 minutes here. This one here. Let me take this one off and put it just on 15 minutes, only on 15 minutes. So now we have this supply zone on 3 minutes that is not mitigated. Price came back, tapped into it, and then we target the opposing liquidity. The opposing liquidity now is this 15 minutes zone. This is a 15-minute zone, 15 minutes demand level is the opposing liquidity, and which was what we targeted. So here you already have 1 is to 27. Here you have 1 is to 19, almost 1 is to 20. All these things happened within a week. This one from Tuesday, from Tuesday to the same Tuesday actually. This happened in a day. This one picked order that same Tuesday and then delivered price as at as a Wednesday, as a Wednesday. So in 2 days you've made over 40 R. But it doesn't just happen like this all the time. It's something you have to be very careful about, very intentional about. You look at it closely. You look at it closely. You have to monitor price. You have to monitor price. And now when we tap into this 15 minutes zone, This is a 15-minute zone that we tapped into here. After tapping into it, we took out the last high, which is this high. Nearly we took this high. I marked my supply level, which price came at, and then we're targeting the opposing liquidity. But if you want to do get in, get out, the kind of trade you just stay in about an hour or less, you could see this trade setup 1 is to 6, getting around 854, come out around 921, less than an hour. So you just target opposing structure high, which is what I did here. This was the last high market created before it came to mitigate the zone. Target that high and you're out on some good profit. So this happens across all assets, but you have to study individual assets and see how it works best. Individual asset and see how it works best. This back testing is on volatility 50, Vix50 indices on derivative, and it's very solid. This thing works. It works on derivative volatility 50. So of course, demand and supply trading works across all assets, but you need to pick the assets that gives it a fair chance that it works the best on. So it's through backtesting that you will now figure out by yourself how best it works and what time frame correlates best for you. For me, 15 minutes for my set limit trades, uh, 15 minutes for my set limit trade, 3 minutes for my confirmation entry trades. I'm not just doing it because somebody told me to do it that particular way. I've seen people say trade 15 minutes at the higher time frame, correlate it with 1 minute. It works for them. I've back tested it. It also works, but it doesn't work for me. The one I feel that gives me a clearer structure, a clearer entry, and a clearer exit is 15 minutes from my set limit order trades, and then 3 minutes for confirmation entry trades. These kind of trades, this kind of trades can liberate you for life. You get this kind of trades, even if it's just once in a month, you're done for that month. It's crazy figure. Put $10 to this trade, you're out to $70. Put $10 to this trade, you're out $190. You're over $400 on just $20 risk. You understand? And then you just write the price action. It gives a very clean price action. You could see the price action, very neat price action, very neat price action. You just write it. So this is how you frame your trade using supply and demand confirmation entries. I hope you're able to pick something from this. And something I want to talk about set limits. Something I want to talk about profit levels. You must understand where you are trading from and how to set your profit levels. You could see that this zone is currently selling back. Now you might not know if price has reversed, or why is price reacting the way it is reacting here. What is the problem? What could be the problem? You need to go back and frame the trade again from a higher time frame perspective. From a higher time frame perspective, you need to go back and frame the trade again. Do you understand? You need to go back and frame the trade again. So let me this thing on 15 minutes. One second, 15 minutes, please. You need to go back and frame the trade again. So let's look for opportunities in the market for today. But what I wanted to show you, you could see that this is my continuation trade. If I had taken it all the way to this high, it will stop me out because there are some imbalances here it was coming to fill. This one is only 3 minutes. So that trade, that continuation entry on the 15 minutes would have stopped me out, even though it has given me a healthy profit of, this was 1 is to 8 target, but it has given me a healthy profit of 1 is to 5, which by every standard is a very decent profit. So you need to understand how to set your target. You need to understand how to set your target. This zone held and delivered profit actually, but it came back to pick order from the true zone, which you cannot see on these 15 minutes. You won't see it here. On the 3 minutes, you'll see it. Probably also see it on 5 minutes. Came back to pick order on that true zone, and from there, it actually gave us the full take profit. gave us the full take profit, and you could see how it gave us the full take profit, which we just marked on our 3 minutes time frame. That will be all for now. The next video I'll be recording will be on, let's do a market breakdown on this volatility 50 and look for new opportunities. So take care of yourself. Thank you. If you have any questions, please don't hesitate to ask. Drop it in the comments. I'll try my best to respond to questions and see you at the other side. If you're having trouble setting profit levels, I have a small resource called TP101. You'll see the link somewhere around, maybe in the book, in the video description, or somewhere around my profile. If you are seeing this on TikTok, you'll see the link there. Okay. So we'll see again. Big Lou saying bye bye for now.